Hey everyone, welcome back to Corporate Decoder, the place where we uncover what companies are really saying behind all the corporate jargon. And today we have a massive filing from Inspirato Incorporated, a company that's trying to pull off a pretty big move. So Inspirato is proposing to merge with a company called Buyerlink, and this filing is all about getting their shareholders to vote yes on this deal. It's packed with details about what this merger means, the money involved, and the big risks. We're going to break down what's really going on. First off, they need shareholder approval for a big stock issuance to buy Buyerlink. This is a pretty standard part of these deals, but it tells us that Inspirato is handing over a significant chunk of its company. To make this happen, they also need to increase the total number of shares they are allowed to issue. Think of it like needing more shares in the cookie jar to make the exchange. And then there's the reverse stock split proposal. This is where every 5 shares you own will become 1 share. They're doing this to try and keep their stock price above that crucial $3 mark on NASDAQ so they don't get kicked off the stock exchange. It's a common maneuver when a company's stock price is struggling. Now let's look at the companies involved. Inspirato is a luxury travel subscription platform. Think fancy vacations for members. Buyerlink, on the other hand, is a technology-enabled marketing services platform connecting businesses with consumers online. It's kind of an interesting mix of businesses, and it sounds like Buyerlink is the bigger player here that Inspirato is acquiring. Here's a critical point. Buyerlink is owned by a company called One Planet Ops, which is controlled by Payam Zamani. And guess who's also the CEO and chairman of Inspirato, Payam Zamani. So we have a situation where the CEO of Inspirato is also the owner of the company his company is about to buy. This definitely raises some eyebrows and is something we need to keep an eye on. After this deal closes, the owner of Buyerlink, Payam Zamani, will own about 91% of Inspirato. This means that existing Inspirato shareholders will own a much smaller piece of the pie, and Payam Zamani will have a huge amount of control. It's a classic reverse merger scenario. The deal is valued at a hefty 326. Inspirato was valued at 38 odd. Patenting purposes, Inspirato was valued at $38.5 million before this deal. Remember that reverse stock split we talked about, that 5-to-1 split will also apply to the shares Buyerlink is getting, so the numbers look a bit different after that happened. This filing has a whole section on risks, and there are quite a few. One big one is that the number of shares being issued won't change even if Inspirato's stock price drops. This could mean the deal becomes even more dilutive for current shareholders. There are also termination clauses, meaning if the deal falls apart, Inspirato might have to pay Buyerlink $1 million fee. That's a significant amount of money to walk away with. And sadly for Inspirato shareholders, they don't get appraisal rights. This means they can't demand a court determine a fair price for their shares if they don't like the deal they're getting stuck with. Now, let's dive into Buyerlink's business and its own set of risks. They operate in the digital performance marketing world, which can be super volatile. Economic downturns, changes in how people advertise online, or even new regulations can really hurt their business. They are in a super competitive space facing big players. If they can't keep up with innovation or offer better performance, they could lose market share. Like many tech companies, a major cybersecurity breach is a big worry. This could disrupt their services, lose customer trust, and cause significant financial damage. Customer data privacy is a huge deal these days, and Buyerlink has to navigate a complex web of regulations like GDPR and CCPA. Failing to do so could mean massive fines and reputational damage. Let's look at Buyerlink's financials. During the 6 months ended June 30, 2025, their net revenue was up about 4.7% to $63 million compared to the same period last year. That sounds pretty good, but if we look closer at the components of that revenue, we see that auto and home servicing period last year. That sounds pretty good, but if we look closer at the components of that revenue, we see that auto and home services revenue increased while verified calls and other revenue decreased. So while the top line is up a bit, not all parts of the business are growing equally. Traffic acquisition costs for the 6 months ended June 30, 2025 were $30.3 million, slightly up from the prior year. This means they are spending more to get that business. Their income from operations for the 6 months ended June 30, 2025 was $11.9 million, which is a nice jump from $9.8 million in the same period last year. That's a roughly 21% increase in operating income, which shows they are becoming more efficient on the operational side. Looking at the full year for 2024, net revenue was nearly flat compared to 2023 at $124.4 million. Doesn't it gather a booming growth story? Traffic acquisition costs actually went down in 2024 to $58.80 million from $63.1 million, showing they might be getting smarter about how they spend money to acquire customers. Income from operations for 2024 showed a good increase, hitting $17.3 million, up from $14.2 million in 2023. That's a solid 22% increase. But here's where it gets interesting. Net income for 2024 was a whopping $25.20 million in 2023. A lot of this jump seems to be tied to a massive change in income tax expense, going from a benefit of $12.6 million in 2023. This tax swing makes the net income look a lot better than maybe the underlying business performance. These pro forma financials try to show you what the combined company would look like. As of June 30, 2025, they estimate total assets around $464 million. But look at the liabilities, which come in at over $407 million. That's a pretty heavy debt load coupled with the assets. And their equity is only about $27.5 million. This shows a company that is financially very leveraged. Looking at the pro forma income statements, it shows that for the year 2024, the combined company would have a pro forma net loss of about 0.020 cents per share. For the 6 months ended June 30, 2025, it's a loss of 0.022 cent per share as well. This isn't exactly a picture of instant profitability. The post-reverse split numbers also show a loss per share, though it looks slightly better on a per share basis due to fewer shares. Getting back to ownership, with Payam Zamani already owning about 49% and his affiliated companies owning another chunk, he's going to have massive control after this merger. It's important to remember that existing Inspirato shareholders will be incredibly diluted. Their influence will be minimal. The risk factors section is always a good place to see what could go wrong. For shareholders, the biggest risk is probably the dilution and the fact that Payam Zamani will essentially be in charge with a combined ownership of about 92% after the merger close. That's a huge concentration of power, and it could mean decisions are made that are not necessarily in the best interest of the minority shareholders. Remember that fairness opinion they got from Roth Capital Partners? It's based on the information they had at the time of signing. If circumstances change between now and the closing, which is very common, the opinion might not reflect the true fairness of the deal anymore. If this deal doesn't go through, Inspirato has to pay a $1 million termination fee. That's a financial hit they'll have to take. So what's the story here? Inspirato is in a tough spot financially, and they're looking to buy a link to merge and provide a lifeline. However, this merger comes with a lot of complexity. We have a founder CEO of Inspirato who also owns the company they're acquiring, which is a huge conflict of interest. The deal values BuyerLink at $326 million, with Inspirato being valued much lower for accounting purposes. The financials for BuyerLink show some growth in revenue and operations, but that massive tax benefit in 2024 makes it hard to tell how profitable the core business really is. The pro forma numbers suggest the combined company won't be immediately profitable on a per variant. Massive for the deal to fall apart, leading to that termination fee. For existing Inspirato shareholders, this means a massive loss of control and significant dilution. The company is betting heavily on this merger to turn things around, but the road ahead is definitely filled with risks. What do you think about this deal and the control concentration? Let us know in the comments below, and as always, if you found this breakdown helpful, make sure to smash that like button and subscribe for more corporate deep dives, and how you should totally join our Discord community linked in the description below for even more insights.